Of using their power to crush rivals and squash competition. All four companies report later today. Plus, it's an earnings bonanza. European companies worth $2 trillion report this morning. We'll speak with the CEOs of Anglo-American, Royal Dutch Shell, and AstraZeneca this hour. Matt, I'm really looking forward to these three executives, especially as some of them had some big surprises in their earnings.
Yeah, absolutely. Huge surprises, especially from Credit Suisse, all to the upside. We got a number of earnings coming up, and we'll see if that moves markets. Futures really aren't doing much of anything. DAX futures down 0.3%. FTSE futures up about 0.1%. The live cash trade starts now. This is the global macro mover screen on the Bloomberg terminal, and you can see each column represents a different risk asset. The left-hand column shows you the live equity indexes as they open up. Bloomberg style is indexes. I don't know who wrote indices there. In any case, you can see the FTSE up 1 or 2 tenths. That's a thing with me and Anne-Marie, by the way. So that's maybe a little bit of inside baseball. The FTSE open up 1 or 2 tenths of 1%. The IBEX in Madrid opening down 0.4%. And then you really don't see otherwise a lot of movement here. Not on the CAC, not on the AAX. So really, these markets are searching for direction, really mixed, Anne-Marie. And it's interesting that the earnings, because we've seen so many beats, don't give us a boost to the upside.
Yeah, Matt, we should actually let our viewers decide here in Europe, do they want to hear the word indexes, which is very American, or indices, which living here for nearly 7 years I've gotten used to. But we have the European markets opening up mixed, with the Fed, of course, stuck to its whatever it takes message, with the virus deaths in the U.S. topping 150,000. Quite a really grim and sad milestone this morning. And here in Europe, investors brace for the busiest earnings day of the summer.
Morning, everybody. Welcome to SG Trader, the live day trading channel. You can follow us for free, copy our trades, and make some profit. We trade live our own funds in front of you and our customers, so you can see how we make a profit. What we show you on the screen, for our new followers, I wanted to tell you that we show you 5 pairs. We show you Japanese yen, we show you British pound, Canadian dollar, euro, and Bitcoin. We trade live our own funds. 1 pip per trade equal 100 pounds, except Bitcoin, where 1 pip equal 10 pounds. For our customers who already got our strategy, you can practice this strategy through our live trades, or you can go to our playlist where you can see thousands of safe trading sessions, and you can practice over there. I want to remind that we're not a college or academy where some people will teach you how to trade all based on charts, old charts, 2-year-old or 3-year-old charts. We trade live our own funds, so basically sometimes we don't have time to cheat chart. You have to educate yourself and try not to let anybody who never traded live accounts teach you how to trade. So welcome again to our live trading channel.
Has really changed to cash preservation. We saw that certainly with the auto figures today and companies like Airbus cutting production. So it's less about how exactly is this virus hitting them, because we do know more about the impacts now than we did, say, a quarter ago. But we want to know how companies are coping with this, how they're keeping their balance sheets, how they're coping with liquidity. And I think that's starting to dominate the picture more. Not to mention the dividend story. We're having banks needing to cut their dividends, Shell, for example, cutting dividends. So that dividend play also making a big impact as investors search for income. Matt?
All right, Danny, thanks very much. Danny Berger talking to us about the earnings reports out today. More than $2 trillion worth of companies reporting in Europe. Now, Anglo American is one of those that's been forced to rely on profit from iron ore and copper to help offset tumbling sales from its De Beers unit. The diamond business reported its weakest earnings since Anglo took control almost a decade ago, with the pandemic crippling almost the entire gem industry. Joining us now is the CEO, Mark Cutifani. Mark, thanks very much for your time. Let me ask you about the diamond market, the collapse that we've seen there. What kind of recovery, what shape do you expect?
Thank you. We would expect to see the fourth quarter start to pick up. If you look at what we've seen in China, you almost couldn't sell a diamond in the first quarter. Yet in May and June, we've seen our best numbers for over 18 months. So from our point of view, May and June, very strong. We'd expect that trend to continue. The US, we expect, will take longer to come out of the COVID issues. So we don't expect the US numbers to materially move probably until Thanksgiving through to Christmas and New Year. So probably a fourth quarter story into 2021.
Good morning. Partly what's going on with De Beers is that there's no urgency to really cut these prices yet. How long can you take that? How long could De Beers not cut these prices? Because the diamonds were clearly the biggest drag on your earnings report.
Well, you've got to remember, diamonds are a luxury product. And from our point of view, they are rare. They're in demand, as we're seeing in China. And so from our point of view, we would prefer to cut production than cut prices on something that is as rare as a diamond. And so from our point of view, better off holding back our production and make sure that we match demand at the right price for the product than undercut the value of our product, which we think is undervalued in any case. So from our point of view, big pickup in diamonds in China. We'd expect the rest of the world to follow as it comes out of COVID, or certainly resets around a different type of world. And so we don't think there's an argument that supports cutting the prices.
I wonder what you think about the less glitzy materials, but maybe more important, certainly more important for the global economy that you're pulling out of the ground. Iron ore and copper are, you know, the building blocks of civilization. So you have an incredibly interesting outlook as to how the COVID crisis has hit the economy. And I wonder what your take is for the recovery in terms of what you see selling these products.
Well, certainly China, the recovery in China has been strong, so we see more of a V recovery there. In other parts of the world, we're probably going to be seeing more of a W type recovery, but the demand for iron ore has been very good. So for us, diamond iron ore has been sparkling. Copper's been strong. Nickel is starting to wake up, and with Mr. Musk making his pronouncements about the world being short for nickel, that's been helpful. PGMs has also been very, very strong. So from our point of view, all of those commodities have been good performers in terms of price, and we'd expect the second half to be very strong in all three. And so we're very well positioned, and we can be a little more patient on diamonds.
So you're not seeing right now China running out of steam at all for the rest of the year?
Not at this stage. In fact, our order books are pretty full in terms of the commodities that we provide. But I still think things will be bumpy, but certainly generally pretty strong, and they're managing things pretty well. I think things will be slower recovering in other parts of the world. We're seeing that with the COVID numbers across the globe, US obviously. But again, we also think that the US will get through, and we would hope by the fourth quarter we'd be starting to see daylight.
For your business specifically, Mark, you're facing more competition from Rio Tinto. It's pushing ahead with plans to build an iron ore mine in Guinea that competes with your projects in Brazil and South Africa. What kind of impact do you expect this to have on your business?
Certainly, in terms of long-term iron ore prices, we'd expect the long-term price to be probably around $60 to $70 a tonne. It's a bit over $100 a tonne today. We've got a very high quality product, so very much in demand. The quality of our product from South Africa and from Brazil is high quality, much higher than what we see come out of the Pilbara today. And so by 2025, let's say iron ore prices are back to long-term levels, it impacts us maybe 5 or 10%. But don't forget, we're growing in a whole range of other commodities, whereas the two big players rely on iron ore. So I think you'll see a big shift in terms of value and value appreciation towards us as our other commodities come into play and the big players get hit on the iron ore price.
Mark, you've outlined plans to spin off your thermal coal business to South Africa. That will leave you with only one left in Colombia. It's really a cliff edge moment for the coal business. This is the most polluting fuel, and it's very hard to get rid of these coal mines because of the price. How do you plan to exit or sell this business?
So we think the best pathway is to demerge. Now, you have to remember that we've already reduced our thermal coal business by over 55%. We sold our assets a few years back in a much better market, obviously. Today, thermal coal only represents 5% of our earnings, and at these prices, probably a little bit less. So it's not a big issue for us. It's a demerger and we move on. Don't forget, we purchased the Woodsmith or the Sirius polyhalite business, which we think is fantastic. So we're moving out of thermal coal and we're building a business that's probably twice the size and twice the contribution that thermal coal was. So we think we've made we've done a good trade in terms of our shareholders, and we think the prognosis going forward is very strong in the crop nutrient side. So we're shifting the portfolio and it's very much future-based.
I want to finally ask you about the dollar, Mark. We're seeing it now continue to weaken, and if it does, is that good for your business? Are you happy about that, and what's your outlook for the dollar?
Look, we think there will be some weakness based on financial performance, but the US will pick back up and recover, we think, later in the year. But, you know, it's going to be a bumpy ride for a little bit longer. Yes, it helps us, but in the end, we want to see the US strong. Everyone is better off if the US economy is doing well. We're growing, the globe's growing. We're all a lot better with the US in good shape, so we hope it picks up quickly.
All right, Mark, thanks very much for your time this morning. Pleasure talking with you. Mark Cutifani there is the CEO of Anglo American. Now, from commodities to energy, coming up, big oils beat as trading revenue saves Shell from a dismal quarter. We'll speak to the CEO, Ben Van Beurden, next. This is Bloomberg.
is Bloomberg Best, your weekly review of the most important business news analysis and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Welcome back to the European Open. We're about 15 minutes into today's trading day, and European equities to the downside, red arrows across the continent. It was a big beat, though, for big oil. Shell's trading business has saved it from what was expected to be its worst quarterly result in its modern era. The oil giant reported adjusted net income of $638 million in the second quarter. That was down 82% from the same period a year earlier, but much better than the $664 million loss expected by analysts. Joining us now is Ben van Beurden, Royal Dutch Shell CEO. Ben, good morning, and thanks so much for joining us. Every part of your business suffered at the peak of the pandemic, and yet you still managed to post a profit. This was all likely down to trading. It must make a lot of money. How much?
Well, we don't split out our trading results, and that is for good reasons, because trading is not just trading in its own right. It is actually the optimizer of the company. So trading is what takes advantage of indeed market conditions, but also our refining footprint, our marketing footprint, our LNG footprint, and even our crude lifting capabilities. So, but indeed, you're right, this quarter, trading showed indeed what a unique capability it is, not just to play the contango on Brent, but contango on many different aspects of the business, taking advantage of all sorts of arbitrages that opened up in unusual parts of the world, and indeed working with this tremendous live market information that our market businesses actually bring and take positions that can be taken advantage of. So it is an integrated capability that really shows how much we can put icing on the cake, so to speak.
You know, the data that you get, I'm sure, gives you unique insight into supply, but also, more importantly, demand, I guess, is the information that we find so interesting, and that you have this, unique view on. Where do you see demand recovering the most, and which, in which areas do you see demand recovering?
It's a very mixed picture, Matt, but you're absolutely right that our trading desks, of course, get a lot of what we call data flow information, often from our marketing business, from their own operations, but also from the massive fleet that we have positioned around the world that we track and see what's going on. I think the picture is very mixed. So we see indeed recovery in those parts of the world that have gone past the first wave. So China looks reasonably good. But surprisingly, for instance, we see, if you look at July numbers, Russia, one of the strongest, India, one of the weakest. So it is actually quite mixed. You cannot make uniform statements about this is good, this is bad. Unsurprisingly, the aviation business is down in many parts of the world, but also perhaps surprisingly, we are still able to make money in these types of markets simply because new type of business models and arbitrage opportunities open themselves up.
Ben, I just want to push you on trading for a moment. In your earnings statement, you said refining, trading business, they made adjusted earnings of $1.5 billion in the quarter. We know that refineries were unlikely to make all that money. Could we assume that a large amount of that $1.5 billion came from trading?
Indeed, we segment a portion of our trading results into the refining business because quite often, indeed, it is through the refining operations and the positions we can take there that traders can make money. But then again, our traders also make money around shorts in our marketing businesses. They make money in our power businesses. They make money in our gas business, LNG business. And these results are segmented in those businesses. Also, our upstream results actually have trading numbers in them. And that's why it is a bit difficult to say, well, this is what trading does. It's also because trading doesn't do these things on their own. They actually are, as I said, the optimizer of the entire network that we have. And therefore, the results are partly reflected within the results of the businesses themselves.
You know, Goldman Sachs, Ben, which does rate your stock a buy and was impressed with your trading profits as well as chemicals earnings, notes that you had relatively weak performance in both E&P and integrated gas. Why is that? Is that just the effect of the pandemic?
Yeah, it's no surprise, of course, that our upstream business and our integrated gas business that are in a large measure, of course, denominated by the oil price and gas prices. They, of course, have seen a very tough trading environment. So indeed, upstream is negative. Integrated gas is positive, but bear in mind there's a lag effect in integrated gas. So we see this quarter the oil price effect of last quarter. So there is a lagging effect in there. But I would nevertheless say, if you look at our businesses, we talked about trading being a unique capability, but still, take our deep water business. It is a crown jewel. It's the best in the industry. Look at our integrated gas business, our LNG business, the best in the industry. Our marketing business, the best in the industry. So we have 4 strong crown jewels that really do very well. Of course, they are not immune to the pandemic, but they're nevertheless, together with the people that we have, show what a good portfolio can do. And we talked about the earnings, but I think more importantly, Matt and Anne-Marie, is to look at the cash. $6.5 billion, which I think is a very credible number given the market conditions we are facing.
Ben, one area, though, we didn't discuss, though, is your debt. We're now above that comfort zone of 30% that Royal Dutch Shell likes to be in it. Are you confident you'll be able to get that back down quick enough?
Well, the debt was relatively stable, Anne-Marie, and I'm afraid I have to unpack the numbers a little bit for you here. Of course, you refer to the gearing being at 32.7%, but bear in mind the gearing is made up of a number of effects. There is a net debt element in there. The net debt has gone up with 1 percentage point, but then we also see that the impairment that we had has an effect on the gearing calculation. We did some pension remeasurements, as you can imagine, in the quarter, which also bumps up our gearing. So the gearing is a very noisy number. If you look at the net debt per se, it has been kept relatively stable. If you take the working capital movement out, it actually had come down a little bit. So it shows that the very strong countermeasures that we have taken already, so $1.1 billion less OPEX, $1.4 billion less cash, and unfortunately also less dividends going out of the door this quarter, that really is contributing to stabilizing the company and preserving our financial resilience that we are going to need in the years ahead.
Let me just ask you about your LNG business, which you mentioned as very strong, would have taken a hit in the last, as the 3 to 6 month price lag is just now starting to show the effects of the pandemic. So what I wonder is, do you expect that to continue to worsen because those lagged effects, may continue to hit in Q3?
I think I'm afraid I have to agree with you there, Matt. So we're going to see in Q3 in our LNG business, by and large, the price environment of Q2. So I expect indeed the realizations to be lower. On the other hand, the volumes are better. So what we are seeing is quite a significant pickup again. And in some markets, we are actually better quarter on quarter already. This is Q2 on Q2 in LNG imports. So you do see indeed industrial activity returning and therefore a pickup in LNG demand as well. But it will be a tough trading environment. Of course, we've seen unusual price movements in the short-term market, or the spot market as it is sometimes called, with almost a convergence of all price indices around the world. So limited arbitrage opportunity. How that will play out in Q3 remains a little bit unknown at this point in time, but I would imagine it's going to be in the main depressed, perhaps with a few opportunities again for our traders to take advantage of.
Ben, very quickly, Brent right now, $43.41. Are you a buyer or a seller on this price?
Probably a bit on both, I would say, if I would ask our traders. I think it is impossible to call the market generically at this point in time, Anne-Marie. We are seeing still a lot of volatility ahead of us, and in large part, of course, that volatility is caused by the sentiment. If I look at your website and see the news flow, you have alternating messages: Brent up because of this, Brent down because of that, and I think it is reflective of the uncertainty that we are still facing. The world is still very fragile. We have to see how demand recovers. Supply is definitely in check, but let's see how OPEC cohesion will play out. Very strong in Q1. Let's see how underinvestment is going to really catch up with the demand reduction. But in the near term, I would say a very uncertain environment that, again, we can take advantage of as well, as you will have seen in the second quarter.
Ben, thanks so much for joining us. Great to have some time with you this morning. Ben van Beurden is the CEO of Royal Dutch Shell after a surprise beat, profitable quarter and cutting costs quite well. Up next, we're going to bring you some of the stock movers this morning, including AB InBev surging after selling more beer than expected in the latest quarter. What else did you think people were doing when they were at home on lockdown? This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. uninterrupted service is peace of mind. Juicy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Fees that retailers had to pay to be able to enter the markets, the democratization of the markets by allowing them to have direct access to the markets over the last 10 to 20 years has really been, a key trend that has driven, I would say, the U.S. markets.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
Welcome back to the European Open. We're 29 minutes into the trading session. Let's take a look at your movers this morning. Lloyd's, the downside, down more than 6%. This comes as their profit was hit by £2.4 billion bad loan provisions. AB InBev, though, up more than 8.5%. This has everything to do with beer sales. They sell Budweiser, Stella, and those beer sales helping to lift the stock today. And then Credit Suisse, up 1.9%. They beat on profit. Also, Matt, they announced this sweeping change in terms of their investment bank, really reversing what former CEO Tidjane Thiam made at the investment bank. A bit of interesting there, and Francine spoke to the CEO earlier this morning.
Yeah, huge beats really across the board from Credit Suisse. Really impressive stuff there. I guess, although it's the estimate really that matters, but they beat even the highest estimate on both the top and the bottom line. Now, AstraZeneca says it has the capability, the capacity to deliver 2 billion doses of the Oxford coronavirus vaccine. At no profit for the drug maker, they're willing to do that, I guess, as an altruistic thing for humanity. Up next, we're going to speak to the CEO, Pascal Soriot. This is Bloomberg.
Boston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Markets. This is the European Open. We are over a half hour into the trading day, 33.5 minutes right now, and you see some big red arrows on European equity indexes, with the benchmark DAX index in Frankfurt falling 1.6%. The CAC and the FTSE are also down, although each less than 1%. So some big drops here across the continent and in the UK. Let's get the Bloomberg First Word News. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Federal Reserve Chairman Jerome Powell is warning of the most severe economic downturn in our lifetime. He kept his message yesterday as dovish as possible, with the central bank holding rates near zero. It's vowing to use all the tools at its disposal to support the recovery. But Powell sounded a downbeat tone on the road ahead.
The path of the economy is going to depend to a very high extent on the course of the virus and on the measures that we take to keep it in check. The data are pointing to a slowing in the pace of the recovery. But I want to stress, it's too early to say both how large that is and how sustained it will be.
The White House is no closer to a deal with Democrats over the next round of stimulus. They need to bridge the gap between the GOP's $1 trillion plan and the $3.5 trillion package House Democrats passed in May. The deadlock comes as crisis measures for millions of out-of-work Americans are set to run out. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anne-Marie, Matt.
Laura, thanks very much. Laura right there in London with your First Word News. Now, AstraZeneca says it is maintaining its full-year guidance after earnings per share beat the average analyst estimate. The British drug maker has also said it has the capacity to deliver 2 billion doses of its COVID-19 vaccine worldwide. The experimental treatment it's developing with the University of Oxford showed promising results in early human testing this month. It's now set to move into larger trials, which are likely to determine how effective the vaccine really is. Joining us now is the CEO of AstraZeneca, Pascal Soriot. Thanks so much for your time, Pascal. Let me ask you first, before we get to earnings, about this vaccine. I guess you're going now for phase 3 trials, and I wonder what enrollment is like and what your expectations are.
Good morning, Matt. Yes, we absolutely are in phase 3 mode now. We have vaccinated almost 10,000 volunteers in the UK, and we are well on our way to vaccinating 5,000 volunteers in Brazil. We may even scale up that study, make it bigger. And we also are enrolling volunteers in South Africa, where we plan to run a study with about 2,200 volunteers. And we're just about to start in the US, so we are certainly in full swing in our phase 3 program.
Pascal, good morning. Anne-Marie in London here. You said you don't want to make a profit. You don't plan on making a profit from the vaccine during the pandemic. But what about when the pandemic is over? What are your pricing plans going to be?
Well, Anne-Marie, our focus right now is actually to deliver this vaccine and deal with the pandemic. And the reason we wanted to do it at no profit is that we thought, this is clearly an example of a disease that we have to tackle globally. We're all in it. Everybody has to be vaccinated and protected. And therefore, we wanted to bring the vaccine to as many people as possible around the world at a low cost. The vaccine is, on a unit basis, very inexpensive. We've set up several supply chains around the world. We have today 2 billion doses of capacity. We want to increase this further so we can vaccinate everybody. Now, when the pandemic is gone, the need for vaccine will be less, of course, and we will have to look at how we manage this. But right now, we're focused completely on the pandemic.
So you don't have any idea about pricing afterwards, and as you point out, Pascal, it's relatively inexpensive to produce. But of course, you pay for research and development. This is what you do, right? You make a drug and then you sell it to people who need it at a profit. Still no idea about what the prices will look like?
Well, actually, when we're in the post-pandemic phase, our view is we will continue to provide the vaccine at very, very low cost for the low and middle income countries so that they can vaccinate their people. And we intend to make a profit, but a reasonable profit in the richer countries. Our pricing will be appropriate. It will be reasonable because we really want people to be able to get vaccinated. And definitely in the low and middle income countries, we will continue to make sure that the vaccine can be accessed by everybody.
Pascal, on both sides of the Atlantic, there's these reports about Russian hackers. Were you a victim of this Russian hack, and what impact, if so, has this had on your research?
Well, we have looked at this, and of course, our systems are very sophisticated from an IT viewpoint. We have some of the best cyber defense that you can imagine. Actually, we have a tremendous team. They are in contact with the US and the UK government cyber defense units. So we are very well protected. We haven't seen any sign that we have been hacked or in the context of this vaccine. In fact, we have a collaboration with our farm in Russia, who have been our partner for many, many years, but is also the partner of other pharmaceutical companies, US companies. They tend to do biologic agents, and they will manufacture the vaccine for us in Russia and export it to a number of countries. So we have a good commercial arrangement with them for the distribution of this vaccine, and they will be an important part of this supply chain around the world.
Even if you weren't hacked, I'm sure that you've gathered as much intelligence as you can on the hackers. What do you think, Pascal, they were after? What do you think these hackers, what was their goal?
Well, I can't tell you that because we have no evidence of hacking as far as we are concerned, and as it relates to the vaccine. We continue to be very, very careful, and we watch out for any sign of spying or hacking in our systems. But I cannot comment on what people would have been after because in our case, there is no evidence of this. And as I said, we have a strong commercial relationship with our farm, our partner in Russia. And our focus really is to bring the world together so that countries can collaborate, and we collaborate ourselves with other companies so we can vaccinate people and deal with this terrible epidemic.
Pascal, Pfizer earlier this week said that they're considering 2 phases of vaccines as they prepare the world to basically live with COVID-19 for much longer than a lot of people expect. Do you agree with that assessment?
Well, again, this virus has proven to be very unpredictable, so it's very hard to make any prediction. But if you listen to the experts and if you look at what is happening, it is quite likely, not sure, but likely the virus is here to stay and come back. And maybe this disease will become a similar disease as the flu. Right now, the focus of everybody and in the industry, many companies are developing vaccines, is to control this pandemic. And after this, it is quite possible that we will have regular episode of infection, but I believe the disease by then will be well controlled. There will be a vaccine or several vaccines, and we will be able to live with this virus.
You do have treatments that you're testing, Calquence and Farxiga. I got to ask, Pascal, how do you come up with those names, Calquence and Farxiga?
I'll tell you this one another day because it's a long story. This coming up with names for pharmaceutical products is a complicated story. Now, we are actually looking at this disease across many angles. We are developing a monoclonal antibody that will be used for treatment, but also protect people for many months, almost like a vaccine, actually. We're using Calquence, which is an agent that we hope can turn off this immune storm that some patients develop when they're infected. And this is actually what kills them more than the virus, because they develop a huge inflammation in their lungs. It also attacks their kidneys and their heart. And we're trying this other agent, Farxiga, which has shown tremendous results in heart failure and in kidney protection. We announced those kidney protection results 2 or 3 days ago. We're trialing this drug in COVID patients. You may know that people who recover from COVID often have problems with their heart or their kidneys. So the idea here is to protect the kidney and the heart during the disease.
All right, well, that's definitely important stuff, and I'm sure hundreds of, well, millions or billions of people are going to thank you for it if you're successful there. Pascal Soriot, thank you so much for joining us today, AstraZeneca's CEO, talking about the progress on the virus and, importantly, on treatments as well. Up next.
New order placed for euro to sell at 117.61.3. So new order placed to sell at 117.61.3.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home. The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Order to sell short euro was cancelled. It moved too fast.
Are 47 minutes into the session right now, and we're seeing losses across equity indexes, with the DAX posting the biggest losses in Frankfurt, down 1.6% right now. So big drops, especially for German companies. And you see Volkswagen, really the biggest heavyweight, down today after saying it's going to cut its dividend. Now, speaking of big losers, the biggest percentage loser in Germany today is Wirecard. And yesterday, 2 senior German ministers faced a grilling over the Wirecard scandal. The finance minister, Olaf Scholz, and the economy minister, Peter Altmaier, testified to the Bundestag's finance committee behind closed doors. Scholz has been the main target of criticism over government failures. If a wider probe is called for, it could last well into 2021 and overshadow the early stages of next year's election campaign. Joining us now to talk more about it is Daniel Baez. He's a member of the Bundestag Finance Committee and Germany's Green Party. And I also think it's just important to say for this interview that he also has a PhD in finance, so he's a great guest for us to have on Bloomberg. He used to work at BCG, and now he serves the country and the climate. Daniel, let me ask about the Wirecard inquiry that you had yesterday. Are you satisfied with the information you got from Schultz and Altmaier over their involvement in the scandal?
Good morning, Matt, and thank you for having me. First of all, I think we're at the beginning and not at the end of this inquiry. We had an 8-hour session yesterday during the course of summer in a special inquiry because it's a huge damage to many investors, but also to the industry in general in Germany. So we brought up a lot of questions to both of the ministers. Some are answered, but others are unanswered. And I think we need further sessions to clear up how can an error, a mistake, a scandal of that size happen as in a DAX corporation. And we have many other questions that we want to ask the government in the following weeks. So as I said, we're at the beginning and not at the end of this inquiry. So do you think that you're going to need a special investigation into this issue, which is, would take a lot of time, would cost a lot of money, and is also something that the AFD is calling for? I mean, this is the dilemma we are facing, because when we open up a special inquiry, this will take up to months to get it kick-started. And then it will take, the elections are coming up next year, so the time frame that has remained is very small. So a special inquiry over the course of summer is an instrument to get quick answers, and that's what we need in this current situation. But at the end of the summer, we, together with other parties from the opposition, have to find a general decision if we need a special inquiry, because there are many documents that are not open up, so because they are confidential. But we need access to get a better picture on why this has happened. And if this is not happening in the regular course of the sessions that we are currently having, we need to focus on a special inquiry called a so-called Untersuchungsausschuss, where we will ask the ministers and many other bureaucrats and experts and auditing firms why this has happened. And the chances that such a committee is coming have risen since yesterday a lot. It just presents a political problem, Daniel, because in the past, when mainstream parties have voted on the same thing or in the same way as the AFD, as we saw in Turingen, it creates a firestorm. In this case, it would look like the Greens are allying with the AFD if there is an Untersuchungsausschuss. This is not the case. To make it very clear, we have the Democratic opposition. This is the left-wing party, and it's the Liberals, and it's the Greens. The three of us have enough power in the parliament to set up a committee like that. So there is no cooperation necessary with the AFD, and the Greens will never cooperate with them. And as I get it from my colleagues from the Liberals and from the left wings, they see it the same way. So we, as a democratic opposition, will find a solution together without the right-wing populists in this special case, which is an important signal to the public at this point of time. All right, Daniel, thanks so much for talking to us about Wirecard. I look forward to having you on again to talk about green investment, to talk about ESG investment, especially with your experience. I think it would be a fascinating conversation. Daniel Baez there is a member of the Bundestag Finance Committee and Germany's Green Party. Now, up next, we're going to bring you some of the stock movers this morning, including AB InBev surging after selling more beer than expected last quarter. This is Bloomberg.
just spoke to Pascal Soriot, the CEO. He said COVID may be here to stay, similar to the flu. He also said they vaccinated almost 10,000 people in the United Kingdom. And then AB InBev, this is quite simple, up 7%. More beer drinking during the pandemic, more beer sales, Matt.
Yeah, absolutely. I guess that was to be expected. I also want to tell you about, speaking of beer, German July unemployment actually falling the number just coming across the terminal, 18,000. We were expecting an increase of 41,000 there. So that's good news for an economy that's probably going to take the smallest hit of the major Western economies in the second quarter. We have incredible interviews still to come on Bloomberg Surveillance. Francine Lacroix will be up next. They're going to speak to the CEO of Airbus, Guillaume Faure, as well as the CEO of Renault, Clotilde Delbos. This is Bloomberg.
Is it? Yeah, so that's Netflix. Netflix. Yeah, I got you, thanks. I've sent you Netflix and I've sent you...
Thank you. Okie dokie. Oh, I don't have much time and I haven't logged in yet. You've got 3 minutes. I've got 3 minutes. Okay, that's reasonable. Right. Hello. I'm trying to log into the Bloomberg, but it's being very slow. It's saying loading for some reason. No one's counting. Yeah, I don't know. I have no idea how long we've got. No one's talking to me. Okay. Cool. Is it just data here, or am I breaking? Whatever it takes, again, the Fed leaves rates near zero. Powell vows to support the recovery as US GDP due later is set to be the ugliest report ever. Airbus cuts production. The world's largest plane maker burns through more than $5 billion in the quarter as it waits out a collapse in demand for new aircraft. We'll talk to the company's CEO shortly. Plus, Credit Suisse's beat shares rise after an overhaul at the investment bank and earnings topping estimates. We'll bring you our interview with the company's CEO. Welcome to Surveillance. I'm Naira Chehich in London. Let's get a check-in on the markets. And after a fairly muted open, we're actually seeing European equities accelerate to the downside. So the Stock 600 down 0.6%. We saw the S&P 500 rise 1.2% yesterday following a dovish Powell, but futures point to a lower open. S&P E-minis down 0.8%. The 5-year yield hit several record lows pre and post Powell, right now just below the upper bound of the Fed's target range. And dollar weakness was the story yesterday, but it's making a comeback today, rebounding from a 2018 low, partly on coronavirus fears. Let's get the Bloomberg First Word News now. Here's Laura Wright. Hi, Laura.
Thanks, Naira. The US death toll from the coronavirus has topped 150,000, the highest official tally in the world. Texas, Florida, and California have all reported record daily fatalities. It comes as infectious disease expert Anthony Fauci warns eye protection may be needed. He says if you have goggles or a face shield, you should use it. During congressional testimony yesterday, Facebook's Mark Zuckerberg broke ranks. He was speaking alongside the bosses of Alphabet, Amazon, and Apple as part of an antitrust hearing. He said Facebook lags behind its competitors, specifically calling out Google and Amazon. Lawmakers grilled the four, arguing they have too much power over digital markets. Credit Suisse says it'll merge trading and investment banking and combine its risk and compliance functions. Its chief executive, Thomas Gottstein's first major revamp of the Swiss lender is aiming to save around $440 million annually from 2022. The revamp undoes some of the decisions by Gottstein's predecessor, Tidjane Thiam.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Naira.
Laura Wright, thank you so much. And we'll get back to the German GDP data in a moment. Of course, that just crossed for the second quarter. We saw a contraction of 10.1%, worse than the estimate of 9%. Now, to get back to the US, first of all, Jerome Powell has kept his message as dovish as possible. The Fed left rates near zero, and its chair made it clear they'll stay that way. He said signs of a coronavirus resurgence are starting to weigh on activity. Powell also urged Congress to boost fiscal spending to offset the biggest shock to the U.S. economy in living memory.
We remain committed to using our tools to do what we can, and for as long as it takes, to provide some relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. The path of the economy is going to depend to a very high extent on the course of the virus and on the measures that we take to keep it in check. The data are pointing to a slowing in the pace of the recovery. But I want to stress, it's too early to say both how large that is and how sustained it will be. The rise in joblessness has been especially severe for lower-wage workers, for women, and for African Americans and Hispanics. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. And it will take continued support from both monetary and fiscal policy to achieve that. The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. These are lending powers, not spending powers. There's great uncertainty around the development of therapeutics and vaccines. All of us want them to happen as soon as possible, but we can't plan on that. We've got to hope for the worst, hope for the best, and plan for the worst, I guess it goes.
On Capitol Hill, another round of talks between the Trump administration and Democrats brought them no closer to a compromise on a virus relief plan as the enhanced unemployment insurance for millions of out-of-work Americans runs out. Joining us now for more is Christian Nolting, Deutsche Bank Wealth Management CIO. Christian, great to have you with us. Thank you so much for joining us. We saw the 5-year yield, of course, hit a record several times yesterday. It continues to slide today. The 10-year yield's been very relatively steady for quite a while. What's your strategy around treasuries tactically versus strategically?
Well, thanks for having me and good morning from my side. So first of all, we are a bit cautious really on only having government bonds. I think if you look at the fixed income strategy in the portfolio, there's not much money probably to be made if you look at developed markets government bonds now, including the US, being at such low levels. What you really would need is even lower yields, which is probably not so likely. From that perspective, diversification on the bond portfolio is really key. And that's why we have to look at other areas. Of course, there's no doubt that we need some government bonds for diversification, for stability of the portfolio. But if you want to create some return in the bond side, you need to look at other, probably a bit more risky spaces. And that could be on the corporate side, where there's a lot of support from the Fed. There could also be some element of high yield, but here, of course, we have to watch the risk scenarios. But that's clearly necessary. So it's less on the government bond side what we are doing.
Right, interesting. So yeah, you do have some preference for high yield. In terms of US versus European equities, Christian, do you see much more upside to the US versus Europe?
Well, interesting to see that we have years and years of outperformance in the US. We have seen a slight change just recently where we did see some outperformance of Europe. That was probably triggered by the discussions we have seen on the recovery fund. Where there is now a positive outcome in Europe. We have seen some client interest both from Asia and in the US, interest me to build some exposure into Europe. But I have to say it's not that they are not overweight Europe. Europe was probably the most under-owned region globally. We have seen some flows in Europe, which also is reflected probably in a rise of euro-dollar. But I don't think this will be like a trend. From that perspective, I would still think we can see better results from the S&P, if you like, than from the Euro stock. So I think this trend will not change, but we have seen a slight movement over the recent weeks, which was quite interesting from my point of view.
Yeah, what I find interesting is your outlook for the recovery is a reverse square root, but also you think that the likelihood of a quicker rebound for the US economy relative to the Eurozone, that's the likelihood that's greater, US economy rebounding more quickly. Some of the high frequency data recently, Christian, has shown the opposite of that. Do you stick to that view, and therefore do you see the upside for euro-dollar capped at where it is right now?
Yeah, so if you look at recent data, that might be the case, but let's not forget the US went a bit later into that crisis mode, if you want, than we have seen in Europe. They were a bit earlier. We had some programs there. So I wouldn't be surprised if in Q2 it's still weak in Europe, it's still weak in the US, but probably the US is recovering a bit slower in Q2. But if you look down the road, I think if you look at the full year 2020, then eventually probably the US will be year-on-year down roughly 5.7 to 6%, and we think for Europe it's a bit more severe. Let's not forget some countries had a very long lockdown period, like Italy, like Spain, less so Germany though. But I think in overall numbers, the Europe area will be probably hit a bit more with this minus 7.5%. And then if you look 2021, I think if you look at the growth potential of the economies, the US will probably do a bit better on the recovery side than the Eurozone.
Okay, so when I talk to people about wanting to gain cyclical exposure, Christian, or exposure to a cyclical recovery, either they favor Europe or they favor emerging markets. You don't seem overly positive on Europe. Are you positive on emerging markets then, or do you really stick with the US as your biggest conviction call as a more defensive market?
No, we like the emerging markets, especially Asia. I think there are some opportunities, and from that perspective, weighting-wise, we are tilted more to the emerging market space, because what we see from a support function on the fiscal side, also from the central bank side, I think there's a lot going to the emerging markets as well. And the growth potential, again, is higher than in Europe, and from that perspective, we do like emerging markets. And yes, probably that's a bit negative on the European area, but that's what we see from a growth perspective indeed.
Thank you so much, Christian Nolting, Deutsche Bank Wealth Management CIO. Great to have you with us today. Just a headline crossing the Bloomberg now. Hong Kong is barring pro-democracy candidates from the LegCo election. This is according to media. We'll bring you more details on that as soon as we can. And coming up next, our interview with the chief executive of Airbus, Guillaume Faury. This is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Good morning, welcome. You're watching Surveillance. I'm Guy Johnson. It is 13 minutes past the hour. Let's talk about what's happening with Airbus. The company is paring back its wide-body jet production. This after burning through an added 4.4 billion euros in the second quarter. The company obviously trying to wait out the collapse in demand for new aircraft. The world's biggest plane maker saw deliveries slump in the second quarter when global fleets were largely grounded. Rival Boeing also announcing a raft of new measures to preserve cash and adapt to the shrunken market yesterday. Airbus's stock is currently trading up by nearly €3. In fact, it's almost exactly at €3. We're tracking around 5% higher on the day. But CEO Guillaume Faury talking about the business facing a difficult situation with uncertainty ahead. The EBIT line did beat expectations, but no guidance has been issued. And Guillaume Faury saying he won't ramp production until he has more visibility. I'm pleased to say that Guillaume Faury joins us now. Good morning. Thank you for your time today. We really appreciate it. You say that you are not going to ramp production until you have more visibility. Clearly, visibility is very difficult right now for your business. Guillaume, on what kind of basis are you operating? How much visibility do you actually have?
Hi, good morning, Guy. So, indeed, we've just announced our half-year results, and we have actually delivered 74 commercial airplanes in the second quarter of 2020. It is significantly less than when we deliver in normal times, but it's slightly ahead of what we were expecting for this very unprecedented situation. In this second quarter of the year, we have completely adapted our production system to what we think is the new environment. And we've reduced, for instance, on the A320 family, from a production rate of 60 per month down to 40. We are now adapted to this new situation, and we work very actively with our customers, with the airlines around the world, with the lessors, to understand what is the right calibration moving forward. And we think this 40 a month is appropriate for us for 2020, for probably the vast majority of 2021. And we are awaiting signals from the airlines and themselves from the passenger traffic to understand when things will recover, because we think there will be a recovery. It's very likely, but what is more difficult to assess at the moment is when. So that's where we are today. We are navigating through a situation with a lot of uncertainty and changes, and we've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Okay, there was a lot in that statement, Guillaume, so let's unpack it a little bit and talk a little about the component parts. Let's talk about deliveries and let's talk about cash. You were not cash flow positive going into the crisis. You said today that you are looking to get the business to a position where it is neutral on cash in terms of the burn as we go through the second half of the year. Deliveries obviously are a key part of that. When you deliver an aeroplane, that improves your cash flow position. How realistic is it to get to a neutral cash flow position given the operating environment that you've just described?
So you made a very good point. The deliveries are critical to the cash flows in our industry, in our business. I see two main elements to responding to your question. The first one is on the cost side. And what we see is that we have managed to adapt to the new situation. So we think we have the right trajectory moving forward for the second half of 2020. So we see now some certainty on our cost reduction program, on our cash containment, we call it. And then we have to make assumptions on the delivery. We have, by end of H1, a large number of planes ready to deliver, but not delivered, actually, because of the situation of the airlines and the customer. We are at 145 planes produced, not delivered. It's very high, and we think we will manage to reduce it significantly in the second half of the year. And this will contribute to the balance in cash flow that we are contemplating. It's an objective because there's a lot of uncertainty. We are making good progress on the new delivery plannings, the new delivery schedules, the amendment to the contracts we have with our customers, and we're regaining visibility when it comes to the second half of 2020 and 2021. This is what makes us more comfortable that we can share that our objective is to be cash flow neutral before M&A and customer financing on the second half of 2020.
Let's talk about the customers then. You described this morning the situation that you have some difficult discussions currently underway and probably ahead as well. What are you saying to customers? What are customers saying to you in terms of their expected deliveries? Are any customers defaulting on their commitments at the moment? And if so, how are you going to extract cash from customers given what's going on?
Well, I'm not sure it's about extracting cash from customers, given the situation they're in. It's more about finding ways of dealing with the situation together and sort of preserving the vital interest of both parties. We have to recognize that there is COVID-19, that there is a big drop in the passenger traffic, and therefore we are working with our airlines and lessors to find the most appropriate way to deal with that situation. So it's a case-by-case discussion, negotiation. Each customer has a different situation. Sometimes it's a changing situation. They manage to find ways to get financing, to regain visibility in the pandemic, in the crisis, and this is when we can clinch new agreements and regain visibility as well for ourselves. We are a long-term industry. We have products which have a long lead time, long cycles, as we say, and therefore it's very important to regain some visibility to be able to plan our production, to plan our cash flows, to distribute the work to the suppliers and give them as well some stability. And this is what we have managed to obtain in the second quarter. And that's why we have a better visibility moving forward. We hope that the recovery of the passenger traffic will be more or less as expected. And would it be the case? We think it's very likely our airlines will stick to the new agreements we've had with them.
Okay, let's just deal with the production. You've cut the 350 rate, the wide body rate, from 6 down to 5. You've talked in the past about kind of having potentially to resize the business to perilously low levels. How much further can you shrink production? Are we getting to the limits of your ability to reduce the run rate, particularly on the wide bodies?
Okay, I missed the end of your question. The connection is not very good, but I think I get the substance. Basically, we have resized the production. We went from rate 40 down to, from rate 60 down to rate 40 on the single aisle. That's behind us. We are now adapted to these new production rates. On the 350, we had come from 9.5 planes a month down to 6 in the early days of the pandemic, early April. We have now decided to go from 6 to 5, and we think this is the best production rate that fits with demand for the next couple of months, for the next few months ahead of us. We are ready to further adapt, and I think what we have proven with this unexpected situation is that it takes us less than a quarter to very significantly adapt production when it comes to going down. Now, I have to share with you that we are as well looking at the end of 2021, 2022, when we think there will be a ramp-up of production again, and where the demand for new airplanes will pick up again. And we want to have flexibility as well moving up, because the traffic will recover, the demand for airplanes will come back, and we need as well to be ready for that. So we need to be very realistic on the short term, but not be too pessimistic for the long term. This industry has a bright future, and we need to be prepared to serve the demand when it comes back.
Guillaume, a pleasure to speak with you today. Thank you very much indeed for sharing some of your time with us. As I say, we greatly appreciate it. Guillaume Faury, the CEO of Airbus. Coming up, our conversation with the Deputy Chief Executive and Chief Financial Officer of Renault. That's in around 10 minutes' time. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
This is Bloomberg Surveillance. I'm Naira Chehich in London. Some risk off today for European equities and US futures. Let's get the Bloomberg First Word News with Laura Wright in London. Hi, Laura.
Thanks, Naira. Federal Reserve Chairman Jerome Powell is warning of the most severe economic downturn in our lifetime. He kept his message yesterday as dovish as possible, with the central bank holding rates near zero. It's vowing to use all the tools at its disposal to support the recovery, but Powell sounded a downbeat tone on the road ahead.
The path of the economy is going to depend to a very high extent on the course of the virus and on the measures that we take to keep it in check. The data are pointing to a slowing in the pace of the recovery. But I want to stress, it's too early to say both how large that is and how sustained it will be.
Standard Chartered is set to begin a new round of job cuts, and sources tell Bloomberg it could see several hundred positions be eliminated. The Asia-focused lender has reported earnings that beat estimates. It set aside less money than expected for bad loans, but Standard Chartered is warning the second half of the year may see sluggish growth. Total has announced an $8.1 billion write-down. That's as the push to cut carbon emissions and the pandemic have raised questions about the viability of some of its oil and gas assets. The bulk of the impairment applies to Canadian oil sands, costlier and more carbon intensive than conventional oil fields. Airbus is paring back its production of wide-body jets. That's after burning through an added 4.4 billion euros in the second quarter. It's pulling back further to safeguard cash as it waits out the collapse in demand. The world's biggest plane maker will now produce 5 A350 aircraft a month rather than the 6 it targeted in April. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Naira.
Thank you so much, Laura Wright. Just some breaking news coming through from Hong Kong. So we learned earlier that Hong Kong is barring pro-democracy candidates from the Legislative Council elections. That was according to media. We're now hearing from the Shanghai, South China, Morning Post, saying that Joshua Wong is among those barred from the Hong Kong election. Activist Joshua Wong among those barred from the Hong Kong election. Also got some retail sales through for June from Hong Kong, down 24.8% year-on-year, just a little bit worse than the expectation of a drop of 24%. Now, earlier we spoke to Credit Suisse CEO Thomas Gottstein just a few moments ago. Take a listen.
I'm pleased with this quarter because it basically underscores the validity of our business model, and we have really had very good results both on the P&L, be it revenues, be it net income, or on the balance sheet. As you said, CET1 ratio of 12.5%, Tier 1 ratio of 6.2%, so very pleased.
What happened exactly with the Tier 1 ratio? Is it, a lot of people were expecting it to go down. It's actually gone up.
Yeah, we obviously were cautious when we gave guidance at the end of the first quarter because we didn't know how much risk-weighted assets would increase. But we managed to control that increase, and at the same time, we generated more capital through our earnings, and that's why our CET1 ratio is at 12.5%.
Talk to me a little bit about the restructuring or the merging of the two units. What's the reasoning behind that?
Well, look, the investment bank merger is something we have been discussing actually for months. Even with my predecessor, it was already a topic, and at the time, in 2015, clearly the two had to be separated because we had to restructure the trading business. Now we are at a stage where we can actually put them back together again, and most of our competitors have it anyway. So, and this is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business, and we also created one GTS, Global Trading Solution business, which builds on our success we have in ITS, and that basically serves our equity and fixed income transactional business for the private bank and institutional business.
How difficult was it to do this in the middle of a pandemic, where maybe it's less easy to speak to people face to face?
It was actually relatively good. I mean, you get used to Zoom calls, and we had obviously many internal calls to get this lined up, but it actually worked very well. And you know, I have to say, not one person within Credit Suisse was against that combination of IBCM and global markets. And you know, David Miller, who is stepping down from the board, he was actually as convinced that we should do this as Brian Chin, and so it was actually not a move where we had to convince a lot of people.
Does it mean that you will see maybe in the future more streamlined Credit Suisse, even more into like 2 or 3 divisions in the future?
No. We believe in the regional model, so we like to have a Swiss business, international wealth management, and Asia business. That makes total sense, and we want to keep that regionalization.
What's your biggest concern over the next 12 months? I mean, we seem to have gotten over the worst with the pandemic, more or less.
Yes and no. I have to say, you know, for example, Hong Kong, we were up to 65% in the office, and now we're back below 20. So the biggest concern clearly is a second wave of infections. We are doing well here in Switzerland. We're almost back to 50% working at the office, but that's really the biggest concern.
So how many people overall do you have working from home as opposed to the office, and when do you expect that to change?
Globally, we have only 20% working in the office and 80% still working from home. We have 90% enabled to work from home. So the trend is going up in most countries in terms of people working at the office, but as I said, there are certain regions like Hong Kong where actually the last couple of weeks we've gone the other way.
Do you expect any permanent changes to people working from home, and what does it mean for some of the real estate that you own around the world?
I definitely expect in the mid to long term that we will have more people working from home, let's say 1 day per week or maybe even 2 days per week. But I still think it's very important that you have this informal exchange, and therefore coming back to the office is something that everybody wants. Everybody I spoke to, they were so happy when they could come back here to Paradeplatz. So it's something that really people want to do.
That was Thomas Gottstein, the Credit Suisse CEO, speaking to Bloomberg's Francine Lacroix earlier after the bank overhauled its investment bank and beat on profit. The shares up about 0.6% right now. Now, Renault, meanwhile, swung to a record first-half loss of more than $8 billion. That's as the French car maker grappled with a sharp market downturn and increasingly dismal results from partner Nissan. The French company, which makes Europe's best-selling electric car, the Zoe, is planning more than 14,000 job cuts to reduce costs by almost 2 billion euros. We can speak now with Renault's CFO and Deputy CEO, Clotilde Delbos. Clotilde, welcome to the show. Great to have you with us. Thank you so much. Your CEO, Luca De Meo, speaking earlier, said that Renault is working with Nissan executives to make sure the fire doesn't take over the whole house. Is this alliance going to survive?
Oh, yes, for sure. I have no doubt about that. Yes, it's true that Nissan has difficulty, Mitsubishi has difficulty, we have difficulties, but I think it's on top, it's even more when you have difficulties that you see the necessity to share costs, to share technology, and to be strong in your alliance, and that's exactly what we're doing. I mean, the difficulties that we show now, we knew them when we presented the alliance plan back at the end of May, so there is nothing that has changed since what we announced to you at the end of May. We're working on it. At the end of May, we explained the logic, the strategy, the idea on how we want to work. Now we're working on the implementation, project by project, region by region, of what it means exactly. Despite all our difficulties, the work on the alliance is going on, and it's going on at the right pace. No worry about that.
Well, speaking of the pace, Clotilde, can you give some guidance on when Renault will no longer be hobbled by Nissan's difficult financial situation?
Well, it's difficult to say, because first it's Nissan who has to say that. But if you look at the announcement of Nissan earlier this week, they said that they will have a difficult year, clearly, on the 2021 year, and that they hope that it will gradually recover up until 23-24, as their fiscal year is ending end of March, as you know. So we will have to bear and help our friends for the next 2 to 3 years before they come back to a more positive grounds, I would say.
Yeah, talk to me then about cost cuts at Renault. Of the 14,600 job cuts planned globally, it includes 4,600 in France. That's 10% of the workforce. How are the discussions going with unions?
Well, they're going pretty well, actually. We had last week, as we speak, we had signed an agreement. You know, in France, it's very complicated, but we have first to agree on how we're going to discuss, and then we can go on the real elements of the discussion. So this agreement has been signed with the union, and I want to underline that every single union signed. No one refused to do so last week. So now we have the frame on how the discussion are going to take place, the calendar, do we need an expertise from an outside person, etc., etc. And right after we come back from vacation, these talks are going to be dealt with stream by stream, you know, the plans, R&D, etc. Everything is now planned, so it's going as planned. We knew it was going to take time, and that's one of the reasons why we announced very early what would impact notably plans, even if it's beyond 2022, because we knew it was going to take time. So we're right in the process of, as we had envisioned, right in the timing. Now the good discussion are going to take place right after summer, and we welcome those discussions. It is first in the DNA of Renault to do it collaboratively with the union and the different stakeholders. And you often find even better ideas of what to do in a plant when you do it that way. If I take the plant that we have in France, where we want to implement a circular economy, since we have started to discuss with our unions, we have more and more ideas of what this means and what could be done in order to implement circular economy in the Flin plant. So everything is going according to plan at this stage.
Okay. That said, when you released the numbers earlier, basically you said that Renault is not in a position to give reliable guidance for the full year. At the same time, you have said this morning that the third quarter might be good. Can you give us a little bit more detail on guidance and to when you actually expect to see a recovery?
Well, first, I think we expect H1 to be the floor, right? I think we should see in the next semesters a gradual recovery of our results. Now, what we know, if we can talk about Q3, is because we have order book, and the order book is pretty good. So we see that the restart of the activity, especially in Europe, it's more complicated in South America and other regions, but in Europe, we see really a pickup in June. We have a full order book that is going to drive us through the end of September. You have all the incentive plans from the different states, especially in Europe again, which are taking place now, from June in France, from July in most of the other countries. So we know that people are going to be willing to go and buy a car, also because the car is safer in everybody's mind than public transportation. So it's quite normal. What we don't know is it just a technical rebound linked to the fact that there has been no business for 3 months and now people want to come back to what they had in mind before, is it's just helped by measures, and some of those measures have a limited time in terms of either period or amount that the states are willing to put on the table. So what will happen in the fourth quarter? What will be the development of the pandemic? Because we think this is not over, and I guess many people think so too. So that's why it was, in my view, ridiculous to give a guidance for the full year. We'll see step by step.
Yeah, it's a big question, isn't it, for everyone, whether it's pent-up consumer demand versus a sustained demand. Renault CFO and Deputy CEO Clotilde Delbos, thank you so much for joining us today. More on earnings next. This is Bloomberg. This is Bloomberg Surveillance. I'm Naira Chahich in London. Let's get the Bloomberg Business Flash with Laura Wright. Hi, Laura.
Thanks, Naira. Nestle is outshining its rivals by reporting sales growth. That's amid strong demand for coffee, with more people working from home. But sales of bottled water slumped as bars and restaurants were closed during lockdowns. Nestle expects 2 to 3% growth this year. It may sell mass-market brands in the US to focus on more of its premium offerings. AB InBev has sold more beer than expected in the last quarter. Sales topped $10 billion. The world's largest brewer saw growth in June after volumes crashed about a third earlier in the quarter. It's a sign that demand for beer is slowly picking up again. AB InBev also saw solid signs of a rebound in China these past 2 months. And that's your Bloomberg Business Flash. Naira.
Coming up, Standard Chartered delivers earnings that top estimates. More from our exclusive interview with CEO Bill Winters next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little.
Economics, finance and politics. This is Bloomberg Surveillance. I'm Naira Chehich in London. Now, Standard Chartered has delivered earnings that topped estimates and said the worst of its bad debt charges have passed. That says the Asia-focused lender set aside $1.57 billion for potential loan losses in the first 6 months and said second-half provisions will be lower. Earlier, I spoke to CEO Bill Winters. I also asked him about the political situation in Hong Kong and asked if more shareholders had expressed concern on Standard Chartered's decision to endorse China's security law.
It'd be hard for me to see that an investor wouldn't support a hope for economic stability and social stability. It's our biggest market. A period of stability would be helpful. It is certainly something to hope for. When we look at the Hong Kong is in quite a severe recession right now. It began with the administrations last year. COVID obviously has made it a substantially more severe recession. The economic figures coming out of Hong Kong this week were pretty negative, and this is a time that I'm sure that investors would hope for economic and social stability in what is otherwise a very vibrant and dynamic economy.
Bill, were you under much pressure from China to endorse the security law?
The decisions that we take in terms of our expressions of hope for economic and social stability are entirely our own. And I think it almost goes without saying that this is something that we would hope for. I think it's the most reassuring thing for me and I think for all of us and for the market, and part of the reason that Hong Kong has remained a target for capital with massive capital raising flows going through Hong Kong in the past couple of months, both from Chinese companies and others, is because there was a strong endorsement of the one country, two systems approach. And with a strong deference to the Hong Kong rule of law, the Hong Kong judiciary, these are the important considerations for the success of Hong Kong as a financial center. And I think investors welcome that.
Right, that's interesting. So in that case then, Bill, do you see Hong Kong becoming a less important market to you over time as a result of the security law? For example, perhaps with a shift to business to Singapore?
Look, we have a big business in Singapore as well. Singapore has some tremendous advantages, and Singapore will continue to thrive. Hong Kong will continue to thrive. Hong Kong is the gateway for capital into and out of China, and it's also an extremely important regional hub, both for financial services, but also for trade more broadly. And there's nothing that we've seen in terms of the actions in Hong Kong or elsewhere that suggests to us that that's going to change anytime soon.
Okay. In terms of the Hong Kong dollar peg, Bill, of course, with tensions between the US and China rising, one thing that's sort of been tabled potentially is the US going ahead with undermining the Hong Kong dollar peg. Are you looking at scenarios in which that might happen? Is it looking more likely for you this year?
I don't think so. I think, first of all, the Hong Kong peg is extremely well supported with monetary reserves in Hong Kong. Over 2 times the money stock is held in foreign currency reserves. So I think we could say pretty safely that the Hong Kong dollar peg is unassailable. That doesn't mean that somebody won't try to assail it at some point, but I don't think it would be successful. And I'm not sure what purpose it would serve in any case. At the end of the day, Hong Kong is an integral part of the global financial system. And attempts to undermine Hong Kong, I'm afraid, would have some pretty deleterious effects on the financial system more broadly. And it's hard to see any policymaker in the world thinking that's a good thing to do anytime, but particularly now during a pandemic.
And And Bill, more generally, with tensions rising in the past few months between the US and China, how do you see those relations evolving, particularly with regard to the Phase 1 trade deal?
Well, it's encouraging to see that the trade deal is still in place, because the tensions and the diplomatic back and forth suggest that things are getting quite a bit worse. And obviously, we're going into the election period in the U.S. and if there's an issue where the U.S. where the Democrats and the Republicans are aligned, it's on the need to be relatively tough with China. So I think we can expect those tensions to probably at best stay stable and possibly get worse. It could impact the Phase 1 trade deal, although I think that was a deal struck in the interest of both parties, and as a result, it hasn't been particularly threatened or canceled. But clearly the rhetoric will pick up, and all we can hope for and encourage is the restoration of a sense of collaboration between the two leading economies in the world.
That was Standard Chartered CEO Bill Winters speaking exclusively to me earlier. We initially saw Standard Chartered shares gain on the bullish outlook for impairments that was better than expected, but the shares now down almost 3%. Banks and car makers are the two industry groups that are the worst performers on the Stock 600. The Stock 600 is accelerating losses to the downside, and you're seeing risk-off reflected in U.S. futures as well, after the S&P 500 gained 1.2% following a dovish Powell news conference yesterday. The 5-year yield hitting another record low below 25 basis points. 10-year yield approaches 55 basis points. But after dollar weakness yesterday, the Bloomberg Dollar Index making a little bit of a comeback today on that risk-off tone. Bloomberg surveillance continues in the next hour. Tom Keene joins us out of New York. More from earnings season, including our conversation with the boss of German healthcare company Fresenius. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
this morning, lower for longer. It will be longer. So says a quote Dower, Chairman Powell. He goes in search of, quote, the best chance to return to a job. He is direct. He is candid about the urgency for fiscal stimulus. Speaking of which, well, it's Thursday, and, quote, hope springs eternal, so says the leader. Stimulus negotiations, they're not going well. How about a compromise? Pro tip, jobless claims at 8:30 this morning. And see you in October. Jeff Staley, he's not impressed with WFH. Barclays says, hi-ho, hi-ho. It's off to the office you will go. Good morning, everyone. Bloomberg Surveillance. Tom Keene at 731 Lexington in New York in the office. Guy Johnson ensconced on the acreage outside London. Guy, good morning to you. The Barclays thing I find fascinating, Guy. Google says you don't have to come back for a year, 5 years, a decade. Jeff Staley says, let's go. Let's get back to the office.
Yeah, I think for banks, it's probably a more pressing concern, Tom. Corporate culture, absolutely critical. And if you think about the advances that sector has to make, it needs to make significant changes still in diversity, both in terms of gender and in race. Corporate culture really important in a bank as well when dealing with risk. All of these things pivotal as he tries to move this institution forward. I can understand why he wants maybe to bring people back into the office. I suspect it's going to be a little bit more flexible than everybody back doing the 9 to 5, Tom.
Well, speaking of flexibility, Credit Suisse flexible as well. Francine Lacroix in Zurich. We'll get to her within the hour. With our first word news in New York City, here's Ritika Gupta.
Morning, Tom, Guy. Negotiations resume today on a compromised coronavirus relief plan. The Trump administration and congressional Democrats are nowhere close to an agreement. They're under pressure because millions of Americans will lose their supplemental unemployment insurance this week. White House Chief of Staff Mark Meadows sees little chance for a stopgap measure that would extend those benefits. Federal Reserve Chairman Jerome Powell calls it the most severe economic downturn in our lifetime. Powell spoke after policymakers promised to use all their tools to support the recovery. The Fed left interest rates near zero. Powell says the central bank will plan for the worst and hope for the best. The number of Americans killed by the coronavirus has now gone over 150,000. Death toll surged to records in some of the hardest hit states, California, Florida, and Texas. Still, the new wave of infections that began in June appears to have leveled off. And Germany's economy plunged into a record slump in the second quarter. Output fell 10.1%. That's the most since Germany went to quarterly GDP reports in 1970. Coronavirus restrictions led to declines in exports, consumer spending, and investment. Recent indicators signal that growth has returned, but unemployment remains high. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy, Tom.
Thanks so much, Ritika. Equities, bonds, currencies, commodities. I know we're going to get to Kit Jukes here, and I'm just going to say the data check is absolutely fascinating. Forget about equities. It's about bonds, bonds, bonds. And all you need to know is yields come in with a vengeance and continue to grind down after the Powell press conference. You see it in the 10-year 0.55. The 2-year yield is absolutely extraordinary. 5-year yield out to record low as well. And you really see it in the inflation-adjusted space, however you want to measure that. Guy, to me, the yield story is front and center.
Absolutely, and it was interesting to see that Powell really didn't stand in the way of a weaker dollar, yet we have a stronger dollar this morning, Tom, and you can certainly see that in euro dollar. We're trading 117.39 right now. European stocks are down today, Tom. It's interesting, got a huge earnings day today here in Europe. We've also had German GDP to contend with. We've also got German unemployment, which was actually better than anticipated. But stocks are significant. The banking sector in particular worth focusing on. Yesterday, you talked about Jeff Staley. Barclays painting a grim picture for the UK economy. Today, Lloyd's taking a huge charge as it sees significant risks for the UK economy as well in terms of impairments. Airbus, though, out with better news this morning. 64.38, the company is trying to manage its cash flow position very, very carefully, and it's talking about a pickup in deliveries in the second half of the year, which will help that cash flow. I talked to Guillaume Faury at Airbus a little bit earlier on. But as you say, Tom, the Fed absolutely front and center, and the Federal Reserve vowing to use all of its tools to support the recovery from that economic downturn that we're all seeing. Chairman Jerome Powell speaking about the road ahead in that virtual news conference.
Yeah, absolutely. It's been a huge, huge change.
Our tools to do what we can, and for as long as it takes, to provide some relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. The path of the economy is going to depend to a very high extent on the course of the virus and on the measures that we take to keep it in check. The data are pointing to a slowing in the pace of the recovery. But I want to stress, it's too early to say both how large that is and how sustained it will be. The rise in joblessness has been especially severe for lower-wage workers, for women, and for African Americans and Hispanics. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. And it will take continued support from both monetary and fiscal policy to achieve that. The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. These are lending powers, not spending powers. There's great uncertainty around the development of therapeutics and vaccines. All of us want them to happen as soon as possible, but we can't plan on that. We've got to hope for the worst, hope for the best, and plan for the worst, I guess it goes.
Got to get that one the right way around. Lots to unpick in there. Let's kind of dig into it a little bit now. Try and get some takeaways. Kit Duke, SocGen's Chief FX Strategist, joining us now to help us with that. Kit, let's kind of work our way through it. Let's deal with the dollar first of all. Did Jerome Powell give the green light to further dollar weakness in what he said last night?
He did nothing to make you buy it. I think it's probably the right way. But I think up to a point, though, what did we expect him to say other than what he did say? I think that's the first question. So there's quite a lot in the price. My concerns about the dollar and the amount it's gone down and recently probably center around the fact that August is illiquid, volatile, nasty, and dangerous for markets, and has been for a long time. And that's not bad for the dollar. And the market has now got a pretty solid bearish consensus sitting here. So if the dollar's still here in September, I'll take Jay Powell at his word and I'll be selling it again with enthusiasm. Right now, I think I'm likely to want to sit back and beware volatility that supports it.
Kit Jukes, we usually talk to you about foreign exchange. I want to rip up the script here today and really shift over to the fixed income space. We can do that. Thank you, Irving Fisher. Kit Jukes, it's real simple. The bond market is speaking in volumes. There is an assumption that the United Kingdom can avoid negative rates. There's certainly an assumption that the United States can avoid negative rates, and the market is testing that right now, isn't it?
For sure. Look, you know, the trouble with negative rates is that they're in nobody's plan. And as Mr. Tyson said, everybody has a plan until they're punched in the face. And this pandemic is punching policymakers firmly in the face. You can't rule it out. I think the UK would be wise to do everything they can to avoid negative rates, given the size of the current account deficit, the position of the currency at the moment here. So would avoid it for different reasons from the United States, but we may yet have to find something that we can do. So it becomes a question of diminishing choices, and no one's going to take negative rates completely off the table.
Well, but what I find interesting here, Kit, is the idea of a Europe that instituted negative rates before the market caught up. That's just one theory, one idea, versus the market directing central bankers towards policy. Is a market going to tell them that you have to avoid negative rates? I mean, are we days or weeks away from negative rates in the United States? It really tests the central bank as an institution.
We're not quite there yet, but it's when nothing else works, you get pushed. Look, the people who went to negative rates first were ones with big current account surpluses, a lot of excess savings, who were doing it in part to force money out of their currency and weaken it in Japan and Europe, and that was one of the means of easing monetary policy further. So it's a dangerous policy in the UK, which needs to attract foreign capital. In the United States, you could easily have negative rates from the perspective of if it would weaken the dollar. I'm not sure policymakers would complain. The problem in the States is a more mundane one, that they want to resist it because the money market funds are so important, and it would damage the plumbing of the financial system. And we've already seen since March how vital it is that we keep the plumbing of the US financial system, or the dollar system, working properly. But I come back to it. If we got a, God forbid, but if we got a nasty second wave globally that really sort of started impacting economic growth in September, October, but central banks are going to be looking and fiddling around in what's left in their toolbox and seeing what they can do.
Okay, let's talk about negative real rates. Is the signal that I should be taking from negative real rates in the United States that the market doesn't believe that the current stimulus plan is going to be enough?
No, I think we could start off with the fact that there's just a chronic shortage relative to, or there's an excess of demand for safe assets, and the US has a monopoly of safe assets, not a monopoly, but has a large part of the world's safe assets. And that if you've got really low rates for a really long time, and you've got people who need safe yield, they get pushed involuntarily into driving these real yields lower. So I don't think it says something about expectations. It says something about the state of the world that we find ourselves in today. That doesn't mean it doesn't have implications. It has implications for gold. It has implications for what nominal yields do. But I think it tells you, we still have a problem with when we all look for cover, and when central banks are buying the safe bonds, and we want to buy the safe bonds, there aren't enough safe bonds around out there.
Kitchuk's with us, and we will continue. It is a really extraordinary Bloomberg data screen right now, particularly in the rate space. A 2-year U.S. to 4 digits, 0.1230. We have a terrific lineup today of wonderful conversation. Kenneth Rogoff of Harvard will join us in the 6 o'clock hour. Please stay with us from London, from New York. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff, and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Surveillance. Good morning, everyone. Guy Johnson in London, Tom Keene in New York. Public service announcement, besides a great conversation we're doing today, maybe, Guy, more than any other time in my time at Bloomberg, do we need to explain the absolute craziness that Europe calculates GDP different than the United States? This is going to be everywhere today, all the time. Europeans will say they create it correctly. Americans will say Greenspan was right. We do it right. I'll let you decide, folks. But, Guy, when we see negative 30% annualized GDP today in the U.S., that's apples in what? Kiwi? Apples in, you know, potatoes compared to how Europe does
it. Yeah. You can't compare the two. Basically, it's done on a quarterly but then annualized basis. You kind of scaling one up to the other. What is it? A negative 35, 36 print today equates to around a 10% drop in the U.S. economy on an annualized basis, which is kind of comparable to what we're seeing out of Germany today, Tom.
Johnson, doing the math, folks, I couldn't do. I'm going to guess about a negative 8, negative 9% European equivalent to what we see in the United States today. After that math exercise, Kit Hughes is about ready to walk away from the camera. He joins us again from SocGen. Kit, I hope we did okay there and didn't embarrass ourselves. Kit, I want to talk about Turkey. I've brought it up for the last couple days. We just had a 7 print on U.S. dollar lira. I'm watching euro, strong euro, weak Turkish lira unravel. How close is Turkey to unraveling?
Pretty close, I would say. You know, the problem that Turkey has twofold. One is they have much less foreign exchange reserve protection available to them than many other countries, and so they don't have much ammunition left to help the currency. And the second is that with the credit stimulus that they've been giving the economy recently, the danger is that their balance of payments is deteriorating, and you don't see it so much in a big economic downturn. But those two things together make it vulnerable. So the guys at the IIF, the Institute for International Finance, have done a really good job on plotting some of the flows. And there are good reasons to be nervous about what happens next for the lira.
Is that a systemic event? Like Tom talks about Turkey unraveling. It's getting pretty close to being very, very sort of difficult for Turkey to manage its way through this, almost impossible. What does a crisis look like in Turkey, and what does that mean for the rest of the international system?
Well, the problem for Turkey is that it's dependent on foreign capital. And the problem of a pandemic is that it makes capital stay at home. So we've seen already that the big emerging market economies that depend on foreign capital, so South Africa, Brazil, Turkey, are three good examples of it. They've all had strains at various points this year. The lira has been holding up pretty well, really, for a while now, and it's coming under renewed pressure. The danger is if you can't get foreign capital to protect your economy, it limits what you can do with monetary policy, and eventually you're forced to have restrictive policies on fiscal policy to try to get your balance of payments in the right place, and that deepens your economic downturn. And that's the world of difference between them and the countries that can engage in quantitative easing, negative rates, all the stuff that we're all exploring at the moment to offset the impact of the pandemic. So I don't think it's systemic. It's just it's a very clear example of the vulnerability of the countries that rely on foreign capital at a time when the world's not working properly.
I guess maybe we could think about the systemic effect maybe working through the diplomatic channel or the geopolitical channel. Obviously, this is a country that sits as a key nexus in a region that is highly unstable. It will be interesting to see how President Erdogan reacts if we do have a major financial crisis. Kit, thank you very much indeed. Kit Hughes, SocGen's chief FX strategist, joining us to give us a run-through on what we got from Powell last night and what's happening in emerging markets this morning. Coming up in the next hour, we're going to continue the conversation on the dollar. Jeff Curry over at Goldman Sachs. He's the global head of commodities research, GS, maybe cautioning, maybe adding some concern to this argument surrounding the dollar dominance that we have all lived with throughout most of our lives, all of our lives. That conversation coming up at 6:30 a.m. in New York, 11:30 a.m. in London. I'm looking forward to it. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Last year, we took you inside the political turmoil gripping Hong Kong. This year, Beijing tightened its position with a new national security law. Will this jeopardize Hong Kong's position as a global financial center? And will China face the consequences from abroad? I'm Stephen Engel. We take a second look at the crisis facing the city in a Bloomberg television special, Hong Kong on Edge 2.
Been working on the strategic future of the company. We're long past the stockpiling phase now in North America, and what we're seeing is big shifts from category to category. So things like hand hygiene growing very quickly.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Guy Johnson in London with Tom Keane in New York. Tom, let's talk about what's happening in the aviation sector. Yesterday, Boeing. Today, Airbus. Airbus paring back wide-body jet production after burning through an added 4.4 billion euros in Q2. That's as it basically waits out this collapse in demand for new aircraft. The world's biggest plane makers saw delivery slump in the second quarter when global fleets were largely grounded. I spoke to the company's chief executive, Guillaume Faure.
In this second quarter of the year, we have completely adapted our production system to what we think is the new environment. And we've reduced, for instance, on the A320 family, from a production rate of 60 per month down to 40. We are now adapted to this new situation, and we work very actively with our customers, with the airlines around the world, with the lessors, to understand what is the right calibration moving forward. And we think this 40 a month is appropriate for us for 2020, for probably the vast majority of 2021. And we are awaiting signals from the airlines and themselves from the passenger traffic to understand when things will recover, because we think there will be a recovery. It's very likely, but what is more difficult to assess at the moment is when. So that's where we are today. We are navigating through a situation with a lot of uncertainty and changes, and we've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
You said today that you are looking to get the business to a position where it is neutral on cash in terms of the burn as we go through the second half of the year. Deliveries obviously are a key part of that. When you deliver an aeroplane, that improves your cash flow position. How realistic is it to get to a neutral cash flow position given the operating environment that you've just described?
We have, by end of H1, a large number of planes ready to deliver, but not delivered, actually, because of the situation of the airlines and the customer. We are at 145 planes produced, not delivered. It's very high, and we think we will manage to reduce it significantly in the second half of the year. And this will contribute to the balance in cash flow that we are contemplating. It's an objective because there's a lot of uncertainty. We are making good progress on the new delivery plannings, the new delivery schedules, the amendment to the contracts we have with our customers, and we're regaining visibility when it comes to the second half of 2020 and 2021. This is what makes us more comfortable that we can share that our objective is to be cash flow neutral before M&A and customer financing on the second half of
Johnson, with his great skill there on the aviation industry, as he mentioned Boeing yesterday and Airbus today, there are differences between the two companies, to say the least. One of the things we've been doing on surveillance is a lot of good conversations with virologists, with epidemiologists on this horrific pandemic. Part of it is the apparatus that will be used forward, given a recovery finally out of this terrible disaster. Stefan Sturm, Fresenius. We do that next.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Guy Johnson in London, Tom Keane, of course, over in New York. Tom, let's talk what's happening with medical technology now. Fresenius, the German company, posting second quarter earnings that beat estimates. Now, that was helped by the performance of the business's dialysis unit, which has carried on and done very well. Still, this German healthcare company has decided this morning that it's going to cut its 2020 guidance outlook. The ongoing pandemic obviously a factor behind that. There is an elective surgery factor that we need to bear in mind. Stefan Sturm is Fresenius' CEO and joins us now on the line to give us some insight as to what is happening here. Stefan, good morning. Thank you very much indeed for your time. We greatly appreciate it. Let's talk about what is happening within the business right now. I'm curious as to why you felt the need to reduce guidance this morning. You are a company that has great insight into what is happening within hospitals. I'm wondering what you're seeing within the kind of the medical institutions that you serve that gives you pause for thought.
Good morning all, thanks for having me. Technically, this has not been a guidance cut. I need to point out that when we were providing original guidance end of February, we made it very clear that this was without any COVID effects at that time. To remind everyone, COVID was a more regional phenomenon out in China. What we've done now this morning is that we have updated our guidance to include all COVID effects that we do estimate for the remainder of the year. And I would point out that the COVID impact for us as a group is relatively benign. It is obviously very difficult to accurately quantify COVID effects, but according to our estimates at the half-year mark, we would have been, excluding COVID, more towards the top end of our originally provided guidance range. When it now comes to what we're seeing out, when it now comes to what we're seeing out there, it is obviously a dichotomy between dialysis treatments where you very clearly have no choice. You either have your dialysis treatment or you die. And on the other hand, the elective treatments, that is the bread and butter business in our hospitals in Germany and in Spain. There, primarily because of government-instigated shutdowns, when we were asked/forced to exclusively focus on COVID patients, we are now obviously looking at a shortfall in admissions relative to the original expectations. That is the key driver of an earnings decline in the second quarter, where, however, more towards the back end of Q2, we are seeing a healthy pickup in elective cases already.
Okay, do you anticipate that that pickup will continue? Are you starting to get pushback from some of those medical institutions suggesting that they are refocusing their attention on what some are beginning to describe as a second wave here in Europe?
The basis for our assumption, for our guidance, is the assumption that we are not going to see a broadly based second wave, but rather local or regional outbreaks that will not lead to nationwide shutdowns like we've seen them in late Q1 and early Q2. What we're seeing is quite some interest from our elective patients to do the procedures that they were originally scheduled to do. And hence, what we're seeing is a pack-up in admission numbers over the course of Q2. We are seeing, and I would very much expect to continue to see, a reversal of the original principle. When originally the thought was we must not treat elective patients in order to reserve capacity for COVID patients, the new principle now is that we are meant to perform elective procedures for as long as we can demonstrate that we have capacity in case another COVID wave comes our way.
And Mr. Sturm, your company is an extraordinary story out of World War II, including the Else Kroner Foundation, which I believe owns 20-some% of the stock. Your company has underperformed since 2017. The share price is just really not very good. Are you under terrific pressure from the foundation to turn around the share performance? How does that work with your other more public shareholders?
I acknowledge that our share price has been underperforming. The interests of company's management and the foundation are aligned, though. There are specific reasons that have led to this underperformance. You will know that we had to go through an ugly fight with Acorn to get out of the originally intended acquisition. You will also know that we had some issues in our German hospital business that led to a profit warning in 2018. We are in the aftermath of this, and management and shareholders, I believe, are well aligned to get over this, show some continuity, and I do believe that the Q2 results that we were presenting this morning are just yet another quarter where we are meeting or slightly exceeding expectations. And if we can continue that, then the share price is also going to correct itself.
Mr. Sturm, thank you so much, and thank you for that candid response to a delicate question. He is the Chief Executive Officer of Fresenius. There's lots more to come here. We've got a terrific set of guests today as well. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. The Trump administration and congressional Democrats are no closer to a compromise on a virus relief plan. The pressure to act is building. Enhanced unemployment insurance for millions of Americans is running out this week. White House Chief of Staff Mark Meadows sees little chance of a stopgap deal that would cover only those jobless benefits. There's an agreement for federal agents to leave Portland, Oregon. There's a disagreement about when. Oregon's Governor Kate Brown says the agents will begin leaving today, but acting Homeland Security Chief Chad Wolf says there will be no pullout until it's clear that local law enforcement can prevent violence at the federal courthouse that's been the target of angry protesters. In Hong Kong, the government has barred 12 pro-democracy activists from running in the upcoming Legislative Council elections. It says they didn't comply with requirements. One of those is support for the national security law passed last month. The move came hours after Hong Kong police arrested 4 student activists for making online comments that allegedly violated that law. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy, Tom.
Ritika, thank you so much. Coming up, this is important, folks. We are thunderstruck by the response of the wonderful effort by all of our team in Hong Kong to help Stephen Engel with The Edge. We're doing it again. Let's listen to an update on Stephen Engel's good work on the crisis in Hong Kong.
I honestly feel that at the end of the day, at the moment, we're on like an airplane with a lot of turbulence. Everybody's holding on, waiting for the plane to land. But in most cases, the plane lands safely.
Or waiting for it to crash.
Yeah, or waiting for it to crash. But I honestly feel that this airplane is not going to crash because China needs Hong Kong. They need an open Hong Kong. They're not going to change the mode here. They just want to keep it safe. They want to make it stronger.
Beijing surely, though, doesn't want a stronger pro-democracy camp. Before the passage of the national security law, pan-Democrat lawmakers had been accused of using disruptive and filibustering tactics while fostering anti-China sentiment. Playing cards, similar to those the U.S. government put out in Iraq during the Second Gulf War, have circulated here, singling out the faces of pro-democracy advocates, including the human rights lawyer Albert Ho, the Ace of Hearts.
There will be a lot of scaring tactics. Many people are being scared away. You know, they want to defeat you without using any force or even without waging any war. That is the way that the Chinese play, the game.
If I sit here and say, no, I will never be arrested, you say, Emily Lau, were you born yesterday? You live under communist rule. How dare you say a thing? I've never said that, even in 1997. But neither did I predict that, oh, I will be arrested tomorrow. No, we live under Chinese rule. So everything that happened, would not surprise us because that's the way they behave to their own people. But we will stay and fight.
I don't think I'm going to leave, even though I know I'm facing imminent risk being put into jail. Because, if I become scared, all the other people will all the more become, very scared. Then the whole community will be stifled.
I have no plan to move Hong Kong, and we need to fight until the last minute. According to the anti-subversion regulation, before the national security law implemented in Hong Kong, this interview is legal. But after the national security law implemented in Hong Kong, this interview might be illegal, and not only arresting me, even arrest you.
Freedom of speech is indeed limited by this new law, but it is mainly the freedom to advocate Hong Kong independence or the freedom to advocate overthrowing the Chinese Communist Party. So I must admit that there is some limitation of freedom of speech.
Is freedom of the press under threat?
No.
No.
No, unless they involve in secession, subversion, or terrorist activities.
But do people have to be worried about what they post on Facebook, what they post on social media, what companies and their employees post?
Yes, I don't think you have the fiduciary obligation for what criminal offense your staff commits. But the point is, if you are not involved with, if you have no intention to carry out secession, subversion, and terrorist acts, then what have you to fear about?
Fascinating, and that's just a taster. You got to watch the whole thing. Make sure you tune in to Bloomberg TV's 1-hour Hong Kong special, On Edge, Hong Kong On Edge 2. So that's going to play out 7 p.m. Friday in New York, airing again throughout the weekend. Make sure you don't miss it. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Fees that retailers had to pay to be able to enter the markets, the democratization of the markets by allowing them to have direct access to the markets over the last 10 to 20 years has really been, a key trend that has driven, I would say, the U.S. markets.
Our services are about connection, and our business model is advertising, and we face intense competition in both.
We had fierce competition at the developer side and the customer side, which is essentially, it's so competitive, I would describe it as a street fight for market share in the smartphone business.
In the few categories which are commercial in nature, we see vigorous competition, be it travel, be it real estate.
We don't have a dominant share in any market or in any product category where we do business.
History shows that if we don't keep innovating, someone will replace every company here today.
Everybody's got a tie on. It's like a wedding. We're going to a wedding. You're going to wear a tie. Alex Webb joins us right now off the Tech-a-thon in Washington here. It's amazing, Alec. Everybody's styling the technology look, and they go to Washington and they have to put a tie on. Why do they have to put a tie on?
I think as they realize that they need to show some respect, that actually this does pose a real threat to a lot of their business models, and they need to do as much as they can around the edges as well as in the core to ensure that doesn't happen.
How invisible was Jeff Bezos?
very invisible for the first hour or so because it seemed they couldn't get his connection up. But he really started to take the heat as we progressed into the second, third, and fourth hours. And the thing that was perhaps surprising, given the experience we've had in Capitol Hill previously, is that a lot of the lawmakers had a really good grasp of the issues of how Amazon Marketplace, which is the part of his business that's under the magnifying glass here, how that operates and how it seems to disadvantage some sellers.
Alex, Guy, they may have had a very good grasp of the issues. They did ask some pointed questions. Nevertheless, doing that does not get us to the position where I can get a clear idea of how the rules are likely to change. Was there any clue that we are any further forward to changing antitrust laws in the United States to solve some of the problems that were being discussed yesterday?
I think that we certainly saw the way the Democrats think about this compared to the Republicans. You know, David Cicilline, the chair of the committee, made a very forthright statement at the end that he thinks that antitrust law needs changing. His deputy on the Republican side said that he didn't think that was the case. So as long as we've got a sort of split between the House and the Senate, it seems unlikely that anything's going to happen. The flip side of that, of course, is we do have investigations underway at the Department of Justice and Federal Trade Commission, and they could really look at the business models of these companies and possibly force some changes. And the point of these hearings, as much as it might be to lead towards change in legislation, is also to put the heat onto those investigative bodies, to give some daylight to the cast some light on the way these companies operate, so the public magnifying glasses again on the companies and the investigating bodies actually do something.
Which poses the biggest risk to shareholders in these companies, regulation or taxes going up?
I hate to equivocate. I think that, it's actually antitrust rather than regulation. Regulation is really about changing small behaviors around the edges, content particularly. Antitrust, which is about fundamentally changing their business models, I think is a big threat and something that the market is increasingly pricing in. If you look at the performance of Google and Facebook over the past year compared to Apple, Amazon, and indeed Microsoft, they have not done as well. And that's because those two companies are under the most antitrust pressure. The real changes to their business models that could come about because they're so dependent on ads and because they control the advertising market. It's something that is taking a lot of attention in both Europe and the US, and I do think that it is a threat to those companies going forward.
Alex Webb, thank you so much. We're going to drive forward this conversation to the next hour here with some markets really sporting, and of course those earnings from selected tech giants. Look for that this afternoon as well. Michael Wolff with us with Activate, really quite good and almost a strategic view of the way forward for these near monopolies. Michael Wolff in the 6 o'clock hour. It's a spectacular 6 o'clock hour coming up. Futures negative 25. Stay with us. This is Bloomberg.
It's humbling and it's incredibly exciting in terms of anything that we've done, so far as a company. Florence isn't trying to trick you that she's a real person. You know, Florence is saying, I'm a digital person, I'm here to help. Florence is digital, there is no judgment involved. So the lack of human judgment actually makes, you know, our digital people more approachable and potentially more helpful.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business. There's always a danger that if regulators behave in an unexpected way, but I don't think so. Based on our conversations we've had with the Swiss regulator, I think they've been very constructive.
I will editorialize. This is a huge deal. All of banking will be watching Credit Suisse as they blow up the failed model. Mr. Gottstein is in Zurich, and this interview was so important. Francine Lacroix, under the duress of the pandemic, attended Zurich as well, and she joins us from a pandemic-free Zurich. Francine, let's first talk about your travel. How was it traveling on airplanes given the pandemic?
Hi, Tommy. Traveling on airplanes was interesting. I keep on seeing pictures on Instagram of empty planes and empty Heathrow, and actually I got the complete different experience. It was full, but everyone was wearing a mask, and I heard of people refusing to wear masks on British Airways. I didn't get that, Tom. It was smooth.
Are we going to see other banks initiate what Credit Suisse is doing?
So, the new chief executive, Thomas Gottstein, is really trying to simplify the bank's complicated structure, which spans New York, London, Zurich, and Hong Kong. He seemed to suggest in the interview that actually it was something that he also took from other banks, so he wanted to align himself with other banks. It's interesting that this revamp, includes a new cost savings program, that Credit Suisse will merge its advisory and trading business into a single division. What was also interesting in the interview is that there were a lot of talk about, this is partially rolling back initiatives begun by his predecessor, but he said that him and his predecessor, Tidjane Thiam, were kind of on the same page, so he almost intimated that the process was started under his predecessor. But it's very clear that at the time, 5 years ago, they split investment bank and the trading business after a slump in revenue, and this was after they saw poor trading results. And now, they're merging the two, and it's also interesting what they've done with risk and compliance, just to put it under the same head.
Francine, the investment bank in many banks is providing the ballast that is supporting the institution as other areas of the bank struggle. What does he see in the second half of the year? Other bank CEOs have pointed to trading becoming less of a factor. Is that the same situation at Credit Suisse?
Yes, he gave us a really quite cautious outlook for the future. Now, again, if we go back to what we saw, there was definitely a resurgence in global markets business. Debt trading revenue jumping some 43% in U.S. dollar terms. There was a strong quarter. Credit Suisse also said that they set aside less than expected for sovereign loans. They saw an increase in capital levels. For the future, they said, look, a lot depends on the pandemic, and he wasn't, that convinced that we saw the worst of it end. But he was pretty confident that this basically shows that they have the right structure in place to deal with whatever that's coming. It was also interesting to hear him talk about dividends, because we spent quite a lot of time looking at European banks and how now the European Central Bank asked them to postpone a lot of dividends, whereas actually for Swiss banks, it's just a little bit different. We heard also from UBS that they were looking at issuing something to shareholders by the end of the year, and the Credit Suisse chief executive confirmed that to me this morning.
Here in July, the planning that usually goes on in October. Francine Lacroix reporting from Zurich this morning. Coming up in the next hour, it is a terrific hour. We start strong with Howard Ward of Gabelli Funds. This is going to really be good. He has been dead on about large cap America as being the place to be. We'll get an update from Mr. Ward, particularly an update here on a day of tech earnings. Possibly we will talk about Mr. Cook. He was the tied one in Washington yesterday. The data check is really important. Yields continue lower off the Powell press conference with curve flattening. Gold $12.70 the ounce, down $7. Please stay with us through the morning. In the dollar space, a little bit of a stronger dollar going against that yield discussion. Sterling, Guy Johnson, just simply large right now with 130 pound sterling. Stay with us. This is Bloomberg. Good morning.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
This morning, lower for longer. Well, it will be longer. So says a quote Dower Chairman Powell. He goes in search of a quote best chance to return to a job. He is direct. He is candid about the urgency for fiscal stimulus. Speaking of which, it is Thursday and quote hope springs eternal. Stimulus negotiations, they're not going well. Pro-compromise tip, jobless claims at 8:30 this morning. That may adjust the conversation. And see you in October. Jess Staley, he's not impressed with WFH. Barkley says, hi-ho, hi-ho. It's off to the office you will go. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Guy Johnson in for Francine Lacroix. Guy in London, Francine Lacroix in Zurich. Guy, to me, the restructuring at Credit Suisse is the tip of the new banking iceberg. You really wonder how many banks are going to really make the aggressive moves a desperate Credit Suisse is making.
Well, I think a lot of them already have this structure, Tom, so it's going to be interesting to see whether those that don't ultimately end up following. But I think individual institutions probably can manage the iBank and trading kind of either way round. It's just what fits kind of management style. Tijan decided to do it the other way. Other institutions kind of have embraced that model, and other have embraced the Gottstein model as well. I think at the moment, the big challenge that these banks are trying to figure out, Tom, is whether or not that trading revenue that is so pivotal right now is going to sustain into the rest of the year. At the moment, it's balancing the ledger, and I think that's the real challenge. Does it continue? If it doesn't, then I think the back half of the year could be really tough.
You nailed it, Guy. That's a total fixation in America and global and on American Wall Street as well. It is a vaccine derby, and by that I mean there's a consortium of people at work. One of the major names, Johnson & Johnson, of course, with their heritage in New Jersey. This is with Beth Israel Deaconess, I believe, up in Boston, where they've got a phase 3 COVID-19 vaccine trial they're going to move forward to September. This is clearly good news along one path of a virus. It's a very detailed note published in Nature this morning. J&J gets some love off of this. Future